Gentlemen, join me in welcoming our panellists to the stage. Sheren, let me start with you. I believe that the initiative has a 10-point plan that's requirements that must be met to achieve the goals of adequate green financing, and several of them caught my eye. But one is the investability of specific initiatives. It does depend on securing a long-term yield and understanding the risk. How far away are we from that sort of a market?
Look, I'm here because there's a green bond market. There's evidence of something happening. There's certainly evidence of investor demand. We had 90 billion issued roughly last year. IFC were the icebreaker in growing this market many years ago, the two $1 billion benchmark bonds. Yeah. And out of that little experiment on the part of the IFC has grown this vast flower. The market will probably double again this year, or close to double the growth rate, and it doubled the previous year. So the growth rate is pretty phenomenal. The main problem we have with green bonds is not investors, it's supply, which is related to the question asked before and your question of investability. But the demand is there. The other thing that's really worth noting in the context of today's session is this is not a European or US just story. 35% of all issuance is emerging markets, with the bulk of that being in China. So China is now the world's largest green bond market by issuance, at least in 2016. And slow first start, huge lumps coming through. We think it's going to be the largest in this year too, despite the French having a damn good go at trying to beat them with their 8.6 billion green sovereign. So that's important to note. It's also important to note that India is part of this story. 4 billion out so far. State Bank of India is coming with a $3 billion green bond soon. We're expecting about 10 billion by the end of the year. We've got regulations from the securities regulator, the Reserve Bank of India is coming up with green finance policy, and so on. And an asset-backed securities market about to bubble up too. ASEAN, the ASEAN Capital Markets Forum will be launching their green bond guidelines in November. We've already seen a couple of green bonds out of Singapore and a green sukuk, Islamic bond out of Malaysia, and so on. And then there's Hong Kong, and Taiwan has also been doing stuff. And I'm very proud to see my friend Frederick Thomas in the room, who worked on the Aboitiz green bond out of the Philippines when he was at Asian Development Bank, along with CGIF here. So, there's all these green shoots everywhere. Yeah. So it is happening. So that's the background to it. In China, I just want to say, this is a deep revolution we're witnessing here from the outside. People in London have still got these old ideas of China most of the time, but we have the head up here has shifted to green with alacrity, with severity, with power. President Xi Jinping at the Belt, not only in Davos, talking about the need to keep the climate change agreement going, but also at the Belt and Road Summit recently talked about the need to green the Belt and Road and cited two funds, two sources of capital as the pioneers for China's Belt and Road. The Asian Infrastructure Investment Bank, and Chairman Jin has said very explicitly on every speech he makes that's going to be clean, green and lean. Look, watch out for their first green bond. They don't need the capital, but they've been told to do it for symbolic reasons. And then over here, we have the Silk Road Fund. And I sat next to the chairman of the Silk Road Fund, $60 billion fund recently, and I said, so what are you doing? We're going green. What do you mean you're going green? Didn't you finance a coal plant in Dubai? And he said it was a very clean coal plant and it meets China's green regulations. And there's a story, right? Because in China, the green regulations are about air pollution first. You need to have very clean coal to get rid of air pollution. However, this is an evolving story because under the Paris Agreement, the Chinese green regulations are now moving to see the exclusion of new coal. And he said to me quite simply, look, when China says new coal is no longer green, we simply will not invest in new coal. It's as simple as that. The Dubai plant won't get up next year. This is what's happening in China. The challenge is making it work in the provinces, making it work with the state-owned enterprises. So that's the background. But your question was more, how do we do this, really? Yeah. So let me cut to that. Nick alluded to the idea that there are a lot of investment opportunities around. You kind of need to understand, the world's climate is going to be won or lost in Asia, frankly. What we do in Europe is relatively trivial. What we do in the US is relatively trivial. How we build the next generation of China and in India, where we are frankly likely to see growth rates of 10% for the next 10 years. Maybe 8%, but very high growth rates. If that isn't green, we are buggered. All of us over here. So that's the first thing to bear in mind. And this applies to ASEAN as well. It means energy, rail, cities, buildings, industries. It is an economy-wide transition. It is not a niche product line. That's what you need to understand. We're not talking about building more parks. We're talking about making sure the whole of our economy is decarbonised in India. We're talking about making sure it is climate resilient. We've lost the first part of the climate battle. We're going to have 2 degrees, possibly 2.5 degrees warming. We're going to have Hurricane Irmas on steroids around the world. We're going to have the failure of the monsoon in India every 5 years. That has a massive implication for infrastructure, water infrastructure, for cities. Mumbai floods, just expect that to be every couple of years. Shanghai will be going underwater, the next big typhoon and a high tide. The whole peninsula is predicted to go underwater with a major storm surge within the next 10 years. And it's not prepared for it. All the pumps that in the canals that pump water out of Shanghai are under sea level and they're not waterproofed. The first surge that comes over, 20 million people economy, the global heart of the economy stops working. That has implications for the UK economy. So we need to understand that climate resilience is a huge part of it. Now, what does climate resilience mean? Infrastructure resilience. You build everything so you can flood the subway and pump it out the next morning and it works the next morning. That's what resilience means. But it also means economic resilience. Pakistan, the biggest pool of young unemployed men in the world today. A tinderbox. One major disaster, like the failure of the monsoon maybe, and we have war. If we don't get economic resilience built into places like Pakistan, we are creating a disaster for the planet. So China's major investments in infrastructure in Pakistan, which are often seen by commentators as building up a bulwark against India, okay, actually need to be also seen in the light of trying to invigorate the Pakistani economy to soak up unemployment, because it is a disaster waiting to happen. So these are the sort of things we've got to do. So it's no small feature. We need green ambition. China has it in spades. It is extraordinary what's already been done with the world's largest high-speed rail network. 80% of all high-speed rail in the world, for example, which is, by the way, getting people out of planes, which is high emissions. We have in India the ambition around energy, around smart cities, around water, and around rail. I met the Indian Minister of Railways recently, who's just shifted, and they talked about their extraordinary ambition to move freight from 1/3 to 50% on rail in China, and at the same time electrify the railway system, currently the world's largest by kilometrage, and build huge metro systems in different cities. Mumbai is building 363 kilometres of subways in the next 4.5 years, for example. So these are all green bonds and green infrastructure and green finance. Second, we need capital reallocation. If you look at the capital resources available in places like ASEAN, India and China, in theory, we could finance it domestically. And we should try and finance domestically. But unfortunately, it's in gold and property. In India, a third of all the world's gold is around the necks of Indians. This is not good capital allocation. And in property, vast property bubble in China, vast property bubble in India as well. That's a tough one to fix, but we do have to start doing that. This is where I think fintech comes in. You know, what Nick didn't say is the Ant Financial story. They rolled out a carbon tracker tool earlier this year. They said you can track your carbon with your purchases on Alipay in China. Everyone uses Alipay. And at the end of it, if you reach a certain point, we'll plant a tree for you. Within 3 months, 200 million people signed up. 200 million people! And where is HSBC with their retail green products to exploit this market? Wrong. I hope we'll talk about that later. Now, that's an example of the kind of demand and also the way we actually get access to all of this private savings by creating real retail green products in places where people are worried about the environment, as they are in China and in India. 3, preferencing. Our whole economic system is biased to fossil fuels. The OECD will tell you that. Still 10-to-1 ratio. It's got to switch. Now, there are a bunch of ways we can switch it. One of the ways we can do, simply, is planning. So all planning, urban planning especially, has got to put through the filter of climate resilience and low carbon. That's just like a mandate. Frankly, we're not doing enough in London, let alone Shanghai. But in Shenzhen they are. I went to visit the Qinghai Free Trade Zone recently. which is this vast city bigger than Canary Wharf. They have, you don't never walk more than 300 metres to a subway. They have block-wide, energy-efficient air conditioning facilities. They have the best water management system I've seen ever. We need to do this everywhere. Second part of that is credit support. So things like the CGIF, and our friend Mr. Nishimura will be talking about it later, need to be repurposed away from brown. No more credit preferencing for coal plants and gas plants. Is that too much to ask, for God's sake, under the Paris Agreement? Make it all green. If you can find a credit preferencing tool, push it to green. If you're looking at hedging solutions, push it to green. Everything. In fact, the whole Asian Development Bank needs to be a green development bank like the Asian Infrastructure Investment Bank. That is not too much to ask. Please, UK Government Foreign Affairs, will you engage your Japanese counterparts on that issue? Shouldn't be too hard. And then lastly, once we get past all of these issues, speed. Christiana Figueres, the former head of the UNFCCC, wrote in Nature magazine recently about feedback loops coming in, climate change and so on. She said we have 3 or 4 years to be able to turn emissions down. So on the mitigation side, what it says is this is a clock ticking. We are 5 minutes to midnight. We need to be doing things at double speed. Stop sleeping, everyone. Stay up at night. Reese, what are you doing going to bed tonight? This is a time to run. This is a time to push product. In China, they want to do it. They need help. They are wanting ideas for green finance product. They are wanting European capital to help make this change. They don't actually currently have enough available capital because it's stuck in gold and property, etc. So to make this shift, we, the centre of the global international financial industry, should be there in spades helping them work. And we can. But speed, and then climate resilience, unfortunately, speed too. Hurricane Irma and these 3 hurricanes that have come to the hurricane in the Caribbean so quickly are about 20 years ahead of schedule. 20 years ahead of schedule. They were supposed to start appearing this intense and this frequently in the 2030s. They're happening now. That means you can start expecting climate impacts in tropical zones in the next 10 years. That means you will see Somalia-style failed states popping up all over the place. The global economic system needs to be resilient. Otherwise, we'll be being asked every year for major Oxfam appeals, which will dwarf Live Aid. Speed.
Thank you very much. A huge amount to address there. And one must say a fairly frightening outlook if things don't move very rapidly. Michael, let's turn to you. Aside from the clear demand, the clear need, whatever, there's steps that need to get, the organisations, governments, companies need to go through to get to accelerate green financing. And one of them, I guess, is regulation. You know, what's your take on it? The speed that's required may or may not be met. But what's the next step? What are the big steps that we need?
Yeah, well, I think the first thing that's important, many of you have been into quite a few of these different conferences. In theater, you never want to go on stage with either animals or children. In the world of green, you never want to follow Sean Kidney. I mean, so much energy. If we could bottle Sean and send him out, I mean, the acceleration would take place almost instantaneously.
I've got to say, yes, we're all going
green
in this room.
And now you want to talk to me about regulation?
Regulation is sexy. I don't care what they say.
Well, look, I mean, I think there's what's extraordinarily important is you can see over the last 3, 4, 5 years, and I think Governor Carney is one of those people who's really been out in front on central banks and governments looking at what their role could be in basically taking the green and really pushing it forward. The Chinese, without a doubt, they are just streets ahead of everyone else. Now, again, kind of a small little footnote, every central bank, every regulatory body has their own definition. Some are only looking at interest rates, some are only macro-focused. We're very lucky, the Chinese are very lucky, the Dutch have been extraordinary, the French, the Swedes. So all of a sudden you saw Governor Carney get out front, you saw the Chinese get out front, and a lot of other institutions all of a sudden started falling in. And again, regulatory people try and look at things around risk. You're looking at where not only risk is important, but also opportunities are great as well. But what we're looking at is often risk. Where does it fall? So the FSB's task force is where do you find, how do you make data available so people can actually understand where the risk is? because so much, and Nick talked about this, so many of the risks are, they're internalized or they're embedded. And when I was a young banker in New York, when we did real estate lending, environmental risk wasn't new. If there was either contamination on the land you were going to build, or if there's a river running under that, you couldn't get credit approval. I believe roughly, I think probably a meter or two of Canary Wharf was, before the Isles of Dogs they could build on, they had to pull contaminated soil off. Yes. So the whole idea of understanding risks and attaching it to credit and attaching it to lending is not new. But there's a lot of risks that we're much more on top of now that we never were. I mean, if you take a look at the pollution both here in London, I was talking to the Swedes, they feel they've got an issue in Stockholm, and certainly China does. Well, what is the role around regulation and financing around those areas? Because now we're finding out that if you start understanding those risks, they actually have implications even to the policy side on your NHS. So to kind of bring your question back together, I think what you're seeing now within their objectives is central banks and regulators really trying to spend a tremendous amount of time understanding the risk, and then from there coming up with policies and regulations that help advance it. As most of you, or many of you may have seen, the Bank of England did a very in-depth analysis of the industry, of the insurance industry, and how well they're adapting to the Climate Change Act of 2008, which basically says, I believe it's by 2040, we have to reduce our carbon by 80%. So how well were they adapting? And we did a pretty wide view on this. Well, we're doing that with banks now. So we're in the midst of it. We should have some results out on December. So, I mean, it's not sexy stuff, but it's really understanding what's the portfolios, what are they looking like, who's investing just in brown, who's investing in green. If your peer is 70% in green and you're 10%, what does that mean? What's the risks that are building up on balance sheets? So I think regulators can take a variety of steps. One is understanding, because we're evidence-based. We have to do the hard work first. And that's why the risk stuff, it may not be the sexiest, it may not be the most interesting, but you need to get the data, you need to analyze the data, and then you can make really evidence-based decisions. And we're doing that. At the Bank of England, we're doing that. The Chinese are doing it. And as we're seeing a lot of the other central banks and regulators in Europe doing that. So those are the physical, from there we can then make decisions on how we want to either encourage, risk weight, all the different things that come from that. And then the other thing, which I think Governor Carney's been outstanding in, and as well as some of the other people, is signaling. Just outright signaling. When you start talking about these issues, people respond. I think even the British government did a great job on signaling about electric automobiles, because immediately, even though it's 2040, the Chinese quickly followed, and that people are now trying to think about, all right, gee, if I buy a car now, should I be thinking about a hybrid or an electric? So don't underestimate even signaling power on the regulatory side as well.
Yeah, great. We'll come back to that, and also the speed with which regulations can change, because that's part of the equation, I would have thought. Ben, let's come to you now. You're the bond guy. That's what we were talking about earlier. Issuance has increased, but how are you seeing the market over the next couple of years? Are you seeing a rapid increase in issuance? Are you seeing a rapid increase or more clarity on risk and more clarity on pricing?
I think we're going to see the trajectory that Sean spoke to. I think we're going to see that, because if you look in the mix, you see the regional mix is changing with more emerging markets coming online, but also the variety of issuers as well. So that's obviously going to help to build up the volumes, and that's, I think, this kind of doubling of the market. I'm pretty confident we're going to see those kind of numbers.
What sort of numbers are you talking about then? So
well, where are we at the end of this year? Something 150 billion.
Yeah.
And that was, when did we do last year, Sean? Right. So and then that was double from. So I really think when you an interesting function of this year of the increase. So you lost a little bit of the China issuance from the year before, but the securitization, I think Fannie Mae and the securitization and the US kind of numbers really helped to drive that up. So that if you kind of see the trajectory of that and others doing the same thing, so I don't think. I'm not too worried about, China's done their round of issuance, and they, next time they're coming back is when they need to refinance it. I think you're going to just get additional structures, additional issuers, and then of course you'll get more emerging markets coming on both domestically and internationally as well.
But it does need quite development, those markets, especially in emerging markets. So the markets generally need more development, capital market development generally.
So we I think part of it is just for an issuer to know, well, one thing is capacity building, and that's one thing we've been really, IFC's bond program, we've got $15 billion to raise this year.
Yeah.
And I think I could probably do that in 100% green. Because I know that, I know there's enough demand there. Sean pointed to the fact we did $1 billion because we knew, we just had a sense that there was $1 billion to take out of the market in green. And I really think there's enough there in other currencies now for an IFC AAA rated bond issuer to do that amount of green financing. But the thing that we've been trying to do more and more, because we know that's doable, what we've been trying to do on IFC side is to tell our clients how to do it and try to get and so this capacity building. Yeah. So, one thing is, okay, we'll raise $1 billion. Next thing, well, let's raise 10 billion rupee in Indian rupee and in green bonds. Mm-hmm. So let's provide local currency to our clients, like Axis Bank and Yes Bank. And people like that who are really trying to develop their green bond programs. So you're starting to see this development from kind of core currency to local currency, but the beauty, I think, is this capacity building and the knowledge transfer that goes along with that as well. So we're not only providing financing in dollars, in local currency, but also the knowledge and what you should be thinking about as a private sector company in a developing country, which is obviously our focus, if you want to start to issue a green bond. So knowing that you have IFC and other partners there to provide that kind of knowledge, you have the financing available through IFC, I think that's going to be a trigger for more issuance in itself. So you can argue, the kind of chicken and an egg between, and I think some people point to this, well, is the green bond issuance itself going to catalyze the growth of assets? But I think in emerging market, that story is very real. And I really think that knowing that the capital is there, both domestically and internationally, with the right structures, then I think issuers are going to start to think, well, I have a market, I have investors, I'll get something off the ground. So I think that is going to be the catalyst for asset growth and bond issuance growth in emerging markets.
So it's a common theme for discussions we have with governments in Asia and with companies. How do you unlock private capital? How do you attract it?
Yeah.
In some respects, it's making the projects and infrastructure, particularly of international standard. Yep. That's a big issue. Yep. But it's also having the instruments in which to invest.
Exactly. So we've got two interesting products. The one is our partnership with Amundi, the Cornerstone Green Bond Fund, and this is exactly targeted at developing emerging market green bonds. So I think with this $2 billion fund, again, that's going to give sovereigns, corporates, financials in emerging markets the confidence to go out there and try it. And there's a technical advisory piece to that too. So again, that's really kind of creating the infrastructure for a new green bond issue in emerging markets. So we've got that, and we've also got this MCPP, so the Managed Co-Lending Portfolio Program. So this is basically kind of a passive fund structure, and it's infrastructure focused. And really what we're doing is providing a first loss piece for IFC's own balance sheet. But also Naeeda have been very smart, the Swedish development agency. And this is something I think needs to be replicated. And to speak to Sean's point about speed, I mean, why aren't others doing this? Why don't replicate what IFC is doing? It's, and replicate what Naeeda's doing. Let's get more public balance sheets to not just do grant funding anymore, but actually just do the first loss. And then you're mobilizing so much more capital. So Naeeda's $1 mobilizes another 8 to 10. Right? So it's much more efficient for our balance sheet, much more efficient for Naeeda. I think it's much more, has a much more mobilizing effect. So this MCPP structure that we have with this first loss piece raises the risk profile of the underlying infrastructure portfolio, and then you're unlocking asset managers, the cash that asset managers are sitting on. So Allianz, Eastspring, the Asia arm of Prudential, and AXA have all committed, $500 million each. So now we're looking towards, with SAFE's early involvement as well, because that was the first MCPP partner. We're looking really towards $5 billion. That's a drop in the ocean in terms of what's needed. Yeah. So again, speaking to Sean's point on speed, we just need our other partners, the other MDBs, to just do exactly the same thing. And look at what Naeeda's done, and other development institutions in developing countries, wherever, do the same thing. Copy that. It's much more capital efficient, and the mobilizing effect is just going to get more cash to green bonds or green infrastructure worldwide, or in developing countries specifically.
Terrific. Naeeda, let's come to you. The OECD's done an interesting piece of research which I think shows that investment in green infrastructure actually has tangible benefits to GDP. It pushes up growth. Can you give us a briefing on that? I think it also came up in our discussion of the ADB that even though there's a bigger price tag if you financed the funding gap in infrastructure green, but there are economic benefits over the short term. It was a no-brainer, I think, was the term. Give us a bit of a sense of your research.
Thanks very much, Michael. Just to say that usually from the OECD, you have a PhD in economics and you've worked in these countries for several years. I'm an outlier. I actually have a background in development and I'm Indian. But I was part of this really big study. I didn't do the economic modeling, but I think it's interesting and a very important point to bring. This year the OECD did an analysis of what would be the impacts on GDP growth if you really go low carbon and climate resilient in the context of the G20. We did it for the at the request of the German G20 presidency because we wanted to look at, well, is it even really realistic to really combine growth and climate agendas? And I'll give you just a snapshot of basically what we found. It was a positive story. We showed that a climate-compatible policy package, what we'd like to call the decisive transition, if it's taken now across G20 countries, we can expect an increase in GDP by 2.8% by 2050. And in fact, it's not just about doing this in the next 40 years. It's also if countries can get their act together and take a decisive transition now, we could, our economic modeling found that we could have a net growth effect of around 1% for G20 economies as early as 2021. On the other hand, because there has to be a bad news story, if we don't do anything in the short term, we could have average losses of around 2% of GDP. So there is, in fact, an economic incentive of taking the decisive transition now. I have to say, if any of you are interested, please Google it. It's called Investing in Climate, Investing in Growth. It's a 317-page monster report and took some very hardcore conventional economists at the OECD 6 months to really get them to think about climate. It was done by the mainstream economists, not by the green team. So it's worth looking at. And it not only talks about the economic modeling part, which is one chapter, but what it shows is what could this policy package look like. Yeah. And it shows that an interesting segue that I'd like to make from that is that infrastructure, so it looked at economic growth broadly, but it then focused down on infrastructure because as we know, infrastructure, and I would like to add the caveat, in developing countries, as we've heard today already, is going to make or break the Paris Agreement. I mean, we know we need clean infrastructure, we know we can't have growth without infrastructure. We also know that 60% or 2/3 of new infrastructure investment is going to happen in developing countries, most of which is in Asia, not just India and China, I would like to say. There are other developing countries that are not always part of the discussion in financial centers, but still a very core part of the development agenda. And I think that infrastructure, how you make it green and how you firstly even make sure that there is any infrastructure and then ensure that it's green is really critical. And I think we've heard aspects of that today. I mean, you need policy, you need capacity, you need technology, and you need finance. And I think on the finance aspect, the important part that I want to mention is exactly what IFC has talked about today. I mean, the role of development finance can be critical, though small, especially in developing countries and emerging economies, your Cambodias, your Vietnams, your Laos, Sri Lanka, etc., the other countries where you do need infrastructure and needs to green up. The kind of models you've been talking about are really crucial, the blending of public and private capital, and that's an agenda that from this report that we are trying to take a little bit further. How can we get treasuries and stakeholders on the boards of multilateral development banks or shareholders in big bilateral development banks or development finance institutions to really strongly take on the climate leadership role and the blending mobilization role? So yeah, I mean, basically 3 points, right? I mean, climate is good for growth. Investing in climate is good for growth. Infrastructure in developing countries is going to make or break it. And development finance, we need to focus a little bit on that.
Great, thank you very much. Let's open it up now to questions from the audience. Again, just identify yourself.
Sean, amazing, energetic portrayal of green and its impacts, potential impacts on our environment. And I agree 100% with your concerns about the developments in Asia and particularly the Belt and Road Initiative actually not being green, because if we think we've got a problem now, if Belt and Road, as it really moves forward, that problem is going to be absolutely huge. My concern is that green to one person is brown to another, or even black. And that's sort of exemplified by the Chinese approach to clean coal. Are there moves afoot? The direction of travel is excellent. Okay, we're getting the energy into the idea of being green. But I'm a simple engineer, and I would like to know that if I'm putting some of my money or pension into a green bond, that it was actually green in the context of my definition, or at least there was a grading of green, because green, as I say, is a spectrum. So what are we doing internationally to actually compare the various definitions of green bonds and get a consistency into it?
Yeah, it's standardising definitions.
Yeah. The second point, very quickly, is that I know that being green is not just about the initial investment. It's actually about how the assets are operated and their impacts on regional economies. You know, I happen to work in what is regarded as a dirty industry, which is aviation, which is actually not that dirty when it comes down to it, but we won't get into that today. But if you take an airport operation, 60% of its carbon footprint is actually about how people get to the airport. So you can have the greenest piece of infrastructure, but what are the secondary impacts? And how are those monitored and how are they mitigated? And how are the performance characteristics that you put into your financial models to define whether this is green or not, how are they actually monitored over time and essentially policed? Thank you.
So we'll start.
Well, the first thing about the green bond market is there's a separation between the credit aspects and the green definition that's happened, which has allowed the market to go. So you've still got to do credit analysis. You still have to do operating management issues, whatever, whether it's green or not. Now, clearly, we would like to change that paradigm by getting more shifting of the system's tilt from brown to green over the next few years, or over the next 6 months, ideally. And that's one of the things that the OECD's done a lot of work on, what economies have to do. But picking your primary point about green definitions. So we've actually had quite a lot of consistency around that. The climate bond standard is an artefact you might know, is now used by many banks. Nick was telling me yesterday for their internal guidance in Europe. The taxonomy is broadly applied. Now, it's essentially a Paris 2-degree compliant procurement list. It tells you this is stuff that's ready for 2050, and there's a few transition things in there as well, they'll be used by date in 2030 or whatever. That's now been largely used for green bonds in LATAM, in India, in Europe, and so on. That's entirely consistent with the very high-level definitions the Green Bond Principles and the International Capital Markets Association put out. This taxonomy just goes to a lot more detail about what kind of buildings are green versus not. And in fact, Arup has been a member of the working panel looking at definitions around buildings. That's step one. And the ASEAN Capital Markets Forum, by the way, is coming out with a view about what is green, which is entirely consistent with that. No fossil fuels in that particular one. The only real outlier is China. So there's not actually that much definition around the world. There's a few little things around the edges. And we're publishing a report in New York on Monday that will give a lot more detail to that. In China, because of air pollution, there was some sulfur reduction things like clean coal near Beijing in there. However, we're working on a project with the European Investment Bank and a bunch of other people, and IFC will be part of that, for example, on merging the work that's been done by international development banks with the work that's been done on the climate bond standard to come up with a global definition set, which is a bit more advanced, which we hope to be endorsed by the European Commission early next year, and that'll be the next step up of that particular thing. We, in parallel, have a negotiation with the Chinese catalogue to harmonise over the next year or so. So by about later next year, you will start seeing very little difference between the two. So I'm going to say it looks fragmented around the world. It's actually not that fragmented. It's just that everyone's doing their national version of the same thing. And that applies to methodologies too. People are broadly using the green bond principles, and Rico from ICMA will talk about that later, for the methodology aspects of green bond. It's just under different names all around the world. And where there are differences, we're in the process of fixing that. Remember that now we have this extraordinary unanimity about achieving our Paris goals, which is the incredible achievement of Paris despite no hard treaty, right? This is just a building of a consensus that has worked. And so now in China, that is the dominant issue. We're able to play to that in India as well, and that's what's underlying it. And the US, hey, who cares about the federal government? Most green bond issuance in the US is municipalities in democratic states who are even more committed to green bond under Paris Agreement than they were before President Trump got elected. Okay. Does that give you an answer?
Nick, can I bring you into this too? I mean, your 5 Rs is standardising. It's got to be part of it. Transparency of reporting, tagging, and all that. I assume that. Are you looking for standardised, harmonised definitions in the next 12, 18 months?
Well, we're getting them, and I think that's what we've touched on is, in a sense, this process is actually being very, in a sense, driven out of the debt capital markets, out of green bonds, and now it's pushing up into the banks. So this notion of green tagging, the IFC is doing some work. We're doing a survey of banks here in Europe to actually see how you can actually get this issue, whether it's energy efficient buildings, renewables, housing, transport, into the core lending criteria. Yes. So every time a loan is assessed, is made, you tag it, you measure it, you get the data, you can then securitize it, you can then actually start doing your credit analysis. And as I said, one of the prizes, perhaps a cherry, is that we then have the analytics which we're able to show, I think particularly with green buildings, that these are better credit risks. Therefore, then you start allocating less capital to it, and then the speed is just accelerated another dimension. So I think I think we should look at the green bond phenomenon as a fantastic success, which is now driving into the other asset classes, and particularly up into loan books, which may never come to the debt capital markets. They may stay on balance sheet, but that's the next wave, I would suggest.
I see you nodding.
Yeah, I was only going to say that I think that's the next development is particularly when you talk about the impact reporting and the transparency that we include in all of our green bonds. The impact is ex ante. And so this analytics that we can provide over time as we look at the performance of, because to the gentleman's question about, well, it's green at day one, what about if it's a 10-year asset? How is it looking at, at year 9 or year 10? And so and I think fintech plays a role here in terms of the analytics and the amount of information, more and more information that we can share about performance, once the green bond is issued. So I really think that being able to then take our impact reports from kind of ex-ante expected development impact to providing ex-ante and ex-post and looking back on the performance and how we fared, because we're not doing that at the moment. Yeah. And I think that's a big area that we want to look at in the future.
And if I could just really quickly jump in, because this is really the elephant in the room, because being able to push into the balance sheet of banks, over 75% of all infrastructure is done by loans, sitting in banks, whether it's the IFC or HSBC. So the green bonds are fantastic and they're great for corporates, but if we're trying to really drive infrastructure, basically the green tagging, it sounds like a small thing, but as Nick inferred, there's huge implications to that. One is the banks understand their portfolios. 2, it opens up so you can maybe do securitization. It brings it into the debt capital markets, which then releases balance sheet to be recycled into more green. So basically driving into the loan space is the next point of the definitions, and it is absolutely critical for green infrastructure, both in Asia and the rest of the world.
Great, thanks.
I just want to say, Industrial Bank of China is actually the leader in this. They've done an amazing job of green tagging within their portfolios. They have a whole green finance program. They say their green bond has been primarily an internal driver of change, and now they're spinning off securitizations, just like Michael wants, again and again and again.
Great. Okay. Next question. There and then there, please.
Thank you. I'm Frederick Thomas from HSBC Global Asset Management, previously at ADB, Asian Development Bank, who I should mention. Sean, I would just pick up on one of the points, and the point you just mentioned again, is the real crux of the issue is whether we can access, the supply of deals effectively in Asia or any other geographies in the world. And some of the issues we still face are to do with regulation. As you say, it's an interesting topic because I see some of the problem, and Kyoshi Nishimura knows very well, in Asia as well, when you took in cross-border bonds, if you want to do beyond just local currency with local investors, if you want to have cross-border, you often face things like withholding tax. And that's still an issue in many countries in Southeast Asia, for instance. So I just wanted to ask the panel their views, or what do they think is being done from the IFCs, multilaterals, or the regulators to help people understand that infrastructure or green bond, even more so, should be exempt from withholding tax when you bring capital from overseas, whether it's in dollars or in local currency.
Mark, do you want to start with
I mean, I'll kick off. Withholding tax is tricky. It's a country by country one. In Italy, they still have withholding tax on people trying to. So that's very difficult. Obviously, discussions in the G20, discussions in multilateral areas, especially on saying this is green, this is important not only for the world but for your region, but ultimately as individual nation states make the decision. Withholding taxes has always been a very tricky item. But I think keeping the discussion, the dialogue going can be helpful, and also specializing in showing how green infrastructure is important to the region can be helpful, but it's a tough nut to crack.
Yeah, and it was, I mean, just one in the masala market, you know, the offshore Indian rupee market, and that was a major hurdle for us, for issuers, not us. I mean, we don't face that challenge, but for domestic issuers to then access the masala market, that was a major hurdle for investors to overcome. And in the end, it was really the government pushing issuers to go and do it and pay a little bit to do it. But I think if they had addressed, again, that's up to the regulators in India to sort that out. In the end, they didn't touch it. But that would have really kick-started the market and got international investors in much quicker. So yeah, but you know, we can't really. I mean, we can advise, we can push, but at the end of the day, it's up to the national regulator.
It's a policy issue, isn't it? It's a government policy issue, and governments need to address this, and this needs to be part of the policy framework. Is that right?
Yeah.
It needs to be part of the policy framework, but yeah, I mean, how you deal with a particular issue of tax, but it's not just tax. I mean, to build underlying assets, you need a whole range of different policy conditions, I'm sure, as you faced. I mean, basic capacity. When I was working in Southeast Asia, you're just trying to get a road or even any of the big dams off the ground. Years and years and years of preparation, and these are publicly financed projects with grants even sometimes. So yeah, I mean, it's a huge amount of work just to get the pipeline. I think it goes beyond roadmaps. It's far beyond roadmaps, especially in poorer countries. Yeah.
Question over here, and then we'll come to Richard.
Terence Bendixson, University of Southampton, an urbanist working on the future of Shanghai. I'm afraid I'm pretty ignorant about financial instruments, but I've got a question about municipal green bonds. Is that an important part of the market? Is it an important part of the future, given that it's cities where all the problems lie and all the solutions need to be found? Clearly, solutions can be found by private property owners in cities, but there's also the municipal side. Thank you, Chairman.
Yes. So I can tell you globally in about, I think the overall market's about 260 billion outstanding globally. I think there's about 10% is muni bonds already. Still too small for what we've got to do. But of course, in amongst other bonds, such as the IFC bonds, there are loans from those bonds that are going to city projects. So the overall allocation to cities is actually much larger if you start looking at where the money's going across the picture, is the first point. The second point, though, is increasing the capacity of city, and more to the point, city institutions like utilities to raise money is an important part of the challenge. In the US, it's working. We have a lot of green bonds coming out of the US. We have a program to grow a green muni market in India. There's interest in the government wants to do it. There are challenges. It's a bit of hard work, but it's necessary, particularly in the scale of urbanisation. Also in China, there is a need to do this. Not so much municipal issuance, but PPP issuance. So this is putting railways and water utilities into a separate vehicle and so on. It is going to be a big part of the future. So we expect that when we get there, $1 trillion a year in 2020, which is our global target for growth, that a very large slice that will actually be the growth of a global green muni market. So you're spot on in saying this. The challenge is creditworthiness of institutions and emerging markets, and that's a cue to the IFC.
Yeah.
So if you look, China, Philippines, Vietnam, and Indonesia, just if you look at cities, green cities, I think by 2030, based on the plans the NDCs were delivered after Paris, $16 trillion required. So part of that will be done by municipalities in those countries, absolutely. And I think, again, there will be these solutions, these risk-sharing facilities that we'll be able to provide, that our partners, the other MDBs, will have to provide to get that to work. But part of rather than just looking at green, but also if you think about China, I've been working on trying to do a panda bond for the last 6 years. And I even said, look, I'll do a green panda if you want, just please help me, and this is IFC talking, we still haven't been able to do it. So I think there's still developments that need to be made in terms of just bond market access for international issuers. It makes it much easier for us to go in and play a role to kickstart these, particularly the municipal, so under the sovereign, and then corporates and financials. Please make it easier. If you can't make it easier for IFC, it's going to be very, very difficult for someone without the kind of calling card that we have. So I think there's more to be done.
Okay, Richard. Yeah, Richard, just yeah.
On the basis that the green bonds are the way of changing the future and making the changes required, does this mean this is the end of carbon trading, the cap and trade operations which were allowed for the reduction of greenhouse gases, not only carbon but NOx, SOx, PMs, PNs and the others? Are we seeing now that this is now a bygone methodology of funding?
Everything has to happen. Think about the scale of the revolution. Anything we can get up politically, we must get up on every single front. I had someone come and talk to me about landscape architecture recently. Should I be changing to finance because that's how we save the planet? I say people need to understand the importance of resilient landscapes. Work in that area in the art world. It applies to every area of endeavour of society, and it applies to carbon trading. So we need carbon trading. We certainly need carbon pricing. What we now know after 20 years of banging our head against the brick wall and being left bleeding is that it's a slow burn. We're not going to change the planet straight away by bringing a carbon price. At this stage of transition where we are, to achieve everything through a carbon price, we'd need $600 a tonne. And we ain't going to get that in the next 24 months. So work on it, push it through, but assume that the big impact is going to be 10 years down once we get pricing. So work on infrastructure planning shifts in the short term. But work on everything.
Nick, can I bring... Sorry, I'm going to bring Nick into this.
I think carbon pricing, as you're saying, is key for this pricing of risk that I mentioned. But I think perhaps where green bonds has taken over is the offsetting market. And I think that is something which is now in the past. And I think one of the aspects of that is actually essentially it was looking at incremental gains. And the issue about green bonds and other green finance is about the fundamentals, it's about the whole project. And I think that's a much more robust way of looking at it, rather than looking at the rather artificial baselines which we experience with offsetting. So carbon pricing essential, it's growing. China's got a carbon market coming through. Most major countries are thinking about this. And it's a necessary part of signaling to capital markets that these risks have prices, but they're not the only price. You've actually got to put in your own prices as well, which are going to be higher than the market price.
Okay, we've got time for one more question before we wrap up. Oh, sorry, do you want to...
Forgive me, one other quick point on that. Yeah. A lot of the infrastructure is being built around ultimately where you will have to price it. If you look at the FSB's work on disclosure, all of the infrastructure around how you disclose, both through the work that the FSB is doing, there's a lot of real technological innovation about how you start understanding what a person's carbon footprint is. So there's still work going on that's taking you down the path of travel in that direction. And the Chinese, I said in a meeting last week, they're just doing some extraordinary work on that. You should be seeing some stuff coming out of their shop pretty soon.
Okay. Other question.
John Adams, China Financial Services, point on PPP, both at the macro and the micro level. On the macro level, it has been said that the Belt and Road will be partly financed by PPP. It seems to me therefore important that we somehow find a way to build a green element into that, whether it's through the AIIB. I'm interested in your views. Then secondly, we are working at the micro level with a major city in China on their PPP projects. On the one side, they've got an incinerator and waste management, which may be negative. On the other side, they're putting in a metro system. How can we build PPP into that particular small model? Where is the push? Does the push come from the municipal government? Does it come from the contractor? Does it come from the lenders? Where would you see that structure hanging together? And I'd be interested if people in the room want to talk to me afterwards.
Yes, but in China, municipal government. So in China, the Communist Party has made it very clear that green finance is actually a KPI for Communist Party officials. I had a meeting with the mayor of Datong not long ago, which is the centre of the coal mining industry in China. They're building a green fund and want to issue a green bond because they've been told the future involves killing coal and they need to shift their economy around. And so because we've got that, because that's happened, let's work with that and use it. But they don't know what to do. So they're trying to figure out. We have 5 provinces as green finance pilots. In your case, I'd be looking first to the officials and supporting them to understand what the central government's green finance directives means and then translating that into the PPP structures and so on. But you're perfectly right about greening PPPs.
I mean, PPPs are notoriously difficult and complex anyway. Building in a green component is likely to be an impediment, isn't it?
It's just green assets. I mean, that's what we're talking about. So we've identified 2 assets there that are green. So in fact, that's easy. We can do green bonds against those. So it's not, the PPP is the structure that follows the asset, not the other way around.
Okay. All right. Ladies and gentlemen, I'm afraid we are out of time.